Hello and good morning. I'll welcome you to the morning meeting today on Thursday, the 26th of April 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as their global head of research and education. And we want to have a look at the markets shortly before the ECB rate decision, which I can already give you my opinion here. Won't bring us any big surprises, but and this is, I think, the main thing to focus on today. What will Mario Draghi deliver here in terms of his rhetoric? Will there be an attempt to down talk the euro? If you look at the price action in Euro USD, for example, over the last 7 days, so from last week, Wednesday, Thursday onwards, what you could see here is that the euro weakened nearly 2 cents. 1 sec, please. So weakened nearly 2 cents against the US dollar and pushed down towards 122 and slightly below that level here. So you can still see that there hasn't been any significant break of an important technical level or something. But in fact, the Euro USD is now testing the lower end of this trading range, which developed over the last 3 to 4 months here from mid-January onwards, and which you can see here between 120, 150 on the downside and 125.50 on the upside, so nearly 400 pips. And so what we're right now testing is the lower end of this range. The question is, will this bullish divergence play out? You can see here we made lower lows. And these are not confirmed in the 14 RSI anymore. The interesting thing about this is if we now say yes, it will play out, or let's put it differently, if Mario Draghi comes out and gives or disappoints the doves here, and the euro sees a rally and probably pushing not only back above 122 but also making it here back above 122.50, well, everyone will say in hindsight, well, was clear that this would happen because the technicals already indicated that such a development would take place. But as I can tell you, the same is true for the downside. So it's still a coin flip, and the cards will be reshuffled, let's say, at 12:30 p.m. GMT. We just don't know in which direction Draghi will come out, and the market is in fact vulnerable to quite significant losses here, mainly due to the fact that the market is very one-sided, or it sees itself, finds itself in a crowded trade. So 1 second, I've already prepared something here, but this is not for the euro, but more for the US dollar. It's showing that US yields here, 10-year yields, are about to spike to their highest levels back to 2011 here. But I want to show you something different. Before we look at yields here in US dollar at the greenback, I want to present you a chart which shows that the markets currently seems to be, I have to say seems to be, that has one good reason. We are looking at the commitment of traders report and here at the euro future. And what we know is that the FX market is a purely decentralized traded market. There is volume traded in the euro future for sure, and here seeing that the market currently has an open interest of 150,000 contracts net long means nothing more than that the market is currently positions nearly 19 billion euro long. But compared to the overall volume, this is way less than probably 10% of the overall FX market here. But nevertheless, it's a good indication. And if you look at this chart here, you can clearly see that if Draghi comes out dovish, those positions will see a huge unwinding, and that means nothing more than the euro has some significant potential to perform well on the downside, let's say, and see a not just push to new lows and attacking one 121.50 or something, but I think we have a good chance to see 120 and even Euro USD below that level here into the weekly close. And so with this in mind, you can clearly see that currently it's in fact very difficult to tell in which direction Draghi will deliver. So I could all in all imagine, when looking at the inflation rate, for example, currently, which came out, I have to look it up, I think last week or the week before, but it was significantly, that's what I want to say, was significantly below the target of 2% here. Again, stabilizing around at 1.2 or 1.3%. Also, this doesn't really matter. This is just pure details. What's more important is that there's a clear motivation to somehow down talk the euro. The euro has seen some significant strength here over the last 12 months. That was mainly induced by the election in France in April 2017, when Emmanuel Macron became the new French prime minister here, and then the market took off from there and started to really find one catalyst after the other. There was also a speech from Draghi in Portugal last year, which triggered some bullishness and indicated a break above the quite significant region of about 115, which was attacked several times in 2015, 2016 here, but nevertheless, euro didn't make it above that level. So it was kind of an invisible line in the market, which the ECB did not want to see break. Where it didn't want to see a break happening here. Let's put it that way. But, and this is the thing, it happened then last year, and so the market currently is trading for quite a while stable above 120, and there is definitely some serious doubts whether the ECB will really see the euro trading that high. So it could be that Draghi starts an attack at the euro somehow. The only thing is that over the last years, I have to say, Draghi failed several times trying to down talk the euro. So it's in fact not a really easy task. On top of the inflation topic, there's also fears around the trade war. You probably remember the press conference in January, one day after Steven Mnuchin, the US Treasury, made some comments in Davos, down talking and obviously trying to down talk the US dollar. And one day later, Draghi made this a topic, but nevertheless failed to somehow find counter rhetoric, let's say, to somehow try to down talk the euro. So we are probably, you remember here, 24th and 25th of January. And make long things short, if you want to probably anticipate a potential trade war and positive, negative effects in this case on the euro economy here, well, you probably need to find ways to somehow down talk the currency, in this case of the eurozone, the euro, and this will be probably the main target. The question is, will Draghi be successful or not? Will Draghi try attempt or will he look for down talking the euro, or will he just reformulate the status quo? If so, if he's not giving away any dovish hints or something, there's also a good chance that then this bullish divergence could play out. But, and this is the thing, currently we just don't know. And in hindsight, we will definitely say, well, if the market pushes higher, well, that was something which could have been expected based on this bullish divergence forming here. On the other hand, if the market breaks lower because Draghi comes out dovish and down talks the euro, and the euro drops towards 120 and probably even below that level, well, we would probably just ignore it and say, yes, well, it was a coin flip, and in this case, we'll probably just ignore it. And so it's very, very difficult to right now identify an advantage. What I'd suggest is just wait for the ECB to come out, to Draghi to comment on the monetary policy in the near future, and then just see in which direction the market reacts and position ourselves accordingly. The same is, by the way, true for the DAX here, which is currently seeing some really choppy, unattractive price action. You've seen that the market came in slightly weaker in the morning, pushing towards and below, not just towards, but below the 50 exponential moving average here. Nevertheless, or let's put it that way, if you look at the price action of the last days, well, you probably will say, well, everything below 12,480 to 12,500 should be considered bearish. But nevertheless, the market started already here to stabilize now. So all in all, the overall advantage can be found on the downside, yes, and probably from a pure technical standpoint, you probably should have traded the DAX here short after it fell below the 50 exponential moving average and broke out of the open range. Nevertheless, I'm not surprised to see the DAX rising here again against this level, since the market is about to see a sequence of higher highs and higher lows, and probably at least trying to negate this sequence of falling highs and falling lows. I mean, the main driver for the bearish action over the last days was, I think, definitely, or can be found definitely, in the developments here in US Treasury yields. And now the thing is that the market looks quite extended here. Again, if such a break happens, well, there's further room on the upside. It could be a significant bullish break, respectively bearish break in T-note futures here. But, and this is the thing, probably, and because the market really expects such a break to happen, which is, by the way, likely, and I think it will happen over the in the near term. But I think, first of all, probably the market will fail to do so, and this could stabilize equity markets a little, and especially in the US, and therefore resulting in the DAX probably making it above 12,500 points, especially if Draghi today comes out more dovish than the market expects him to come out, respectively coming out dovish in general. This could also negate then this sequence here, again, of falling highs and falling lows on the hourly chart, and at least turn the picture from bearish, which happened yesterday with the break below 370 to 400 here, at least push it back towards neutral. Yeah, but also here, let's just wait and see. So far, it's very difficult to spot an advantage, and the overall price action, as you can see here, is very, very unattractive, choppy sideways, and we should definitely wait for more details from Draghi to come, how the market interprets them, how the market reacts, and then probably position ourselves. Because the thing is, right now, we are only talking about spikes on the upside and the trend developing here in the DAX in this case, or in the downside in the euro, or the other way around, meaning that the DAX probably will sell off while the euro will aggressively push higher against the region around 122. There's also a third option, nothing happens at all. So probably there will be some rhetoric which is nothing spectacular, resulting in some volatility because the market expected Draghi to come out in one or the other way. Right now, more dovish, which means slight hawkish touch, or a reformulating of the status quo, not saying anything at all, which is completely new to market participants, probably is kind of disappointing and will result in a short spike on the upside in EURUSD, pushing DAX probably slightly lower. But then the market will probably trade back towards this level again and only see a spike in one or the other direction, and then coming back to the initial quote, and then just trading sideways into the evening, waiting for impulses probably to come from the US equity markets. So this is the third outcome. And in fact, when stepping back a little, I somehow get more and more the feeling that this is probably something which has the highest probability so far. So I'd really love to see the market really trending strongly in one or the other direction, mainly due to the fact that this is my favored market environment in which I feel comfortable, and in which I then try to position myself and try to capitalize on this advantage I have here. Nevertheless, it's also a quite good chance that nothing will happen at all here. Okay, so that's it on the DAX then. Also wait and see as in the EURUSD. Let's have a look at the dollar Japanese yen. I think also very interesting, because what we just saw here in terms of the yields is something which is playing a significant role for a dollar Japanese yen too, I think. Because now the question is, will there be a break? If so, I think this squeeze, which was initiated back with a break back above 107.50 to 108, could then push dollar Japanese yen easily towards and also above 110. But, and this is the thing, if the market does not break, so in this case yields do not break to the highest level since 2011, but start to stabilize at the current level, probably see a small pullback here. This is also something which could happen then in dollar Japanese yen. So not necessarily, it's not not necessarily the case that dollar Japanese yen will push back towards 107.50 to 108. That's not necessarily the case, but probably dollar Japanese yen can stabilize on a elevated level here, and then in the lower time frames we can go for a squeeze trade, let's call it, in direction of the momentum after the break of 108, so on the long side, but trying to trade a break out of such a range which could develop here if yields stabilize around slightly below 3%, and then rather soon later we get to see a squeeze and a push higher in yields, US yields, 10-year yields, and also in dollar Japanese yen here in this case. All this said, by the way, let's have a look at gold. I think this is also something which is really, really interesting, because we can also argue dollar Japanese yen from another perspective. But let's first of all have a look at gold here and then switch back to dollar Japanese yen. The interesting thing is, I think, that gold can present itself as a yieldless asset here, quite stable. So usually when yields rise, as they did over the last days, usually expect gold to perform way weaker than it currently does. And so first of all, this I think is a bullish sign. So I'm not saying that I'm taking aggressive long approaches here in this trading range. That's definitely not the case. But I think it's currently, looking at the yield where the developments in yields here, I have to say that I think it's more likely now that there will be an attempt to attack 360 to 365 with a squeeze higher. Even though the current price action is choppy sideways, and if you look at the lower time frames, you can see a clear bearish tendency here. But I think this is strength, and it's likely that I think over the next weeks there is a good chance that gold could see another quite aggressive attempt to take out 360, 365 with further room minimum up to 1,400 USD per ounce, even higher than that, I think. And the driver for this could be a risk-off move, because this is the thing. Yields rising mean that, especially, for example, emerging markets are coming into our focus again. Emerging markets probably see, based on this push higher here on yields, see probably some capital outflows. And that was something we could have seen the last time when we traded in this region here. That was in 2014, at the beginning of this year. Emerging markets were quite volatile back then. And as you can see here, the market pushed to these levels at the end of 2013 and then saw a significant drop. This was mainly due to the fact that there was some significant risk aversion building. Which then resulted in quite volatile days and weeks in the equity markets back then. So, and this is also something we should take into account here. So if risk-off spreads based on too fast or too aggressive rise in rates, and the market participants start to get nervous, and for example, emerging markets start to see some higher volatility, this is also something to take into account, because then it's not only a positive driver for gold here based on risk off and potential sharper setback in US yields, but dollar Japanese yen could also see a quite aggressive corrective move based on, and again, starting unwinding of carry trades here. And we know that the Japanese yen is a financing vehicle for such trades. So that's also something to consider. So it's not a one-way street here. It's not sad that things will develop as I presented them. It could, once the market starts to get nervous, could play out that dollar Japanese yen, for example, sees a stronger move on the downside, even or especially when yields rise. And that's it from my end. So I wish you all the best. Happy trading. Watch your stops. Talk to you again tomorrow, 9:30 a.m. GMT in the morning meeting. Then we'll have a look at the ECB, what they delivered, how market reacted, and so that's it from my end. So all the best. Take care. Talk to you soon. See you, and bye-bye.